Yo, what's going on, people? Hope you're all good. Today is the 29th of December 2019. Obviously just gone Christmas, so I hope you've all had a great Christmas and not piled on too much weight over the festive period. I'm the Third Eye Trader. This is obviously my first ever YouTube video. I'm going to be making a lot of content now going forward into the future. I've got quite a lot planned there. The reason as to why I go by the name of the Third Eye Trader is due to my style and methods of trading, which is quite unique with a higher consciousness of really understanding the cycles of the markets. But I'll cover that in future content. But for today, really just going to be covering the basics of trading, what Forex is, what is trading, and how we make money as retail traders in the financial markets. So if you're new to trading, if you're looking to learn, stick around, watch the video, and we'll cover it today. So without further ado, guys, let's jump into the video.
She wanna know me, I don't really wanna know her. She really wanna phone me, I really want my dough up. I ain't into this fake shit, dripping when I make it. Sipping, I be faded. My flavor be tasting amazing.
Okay, guys, so this here is the Forex market. Now, Forex is short for foreign exchange, as some of you may know. But Forex, as an asset class, has the highest range of daily liquidity flow than any other asset class in the whole financial market. So, that can go up to $7 trillion on a daily basis. And what that really means is $7 trillion is approximately now the amount of money that changes hands on a daily basis. So, yeah, quite a lot of money. Now, the market in general trades 24 hours a day, 5 days a week. So it is constantly moving, constantly ticking all through the week, and then obviously closes for the weekend. Now, what I'm looking at here is the Great British Pound against, as it states, the US dollar. This is the chart. This is the price. Now, as you can see, as I move my cursor up and down to the right of the screen here, you can see the price is quoting. And this is a daily time frame, which means every single candlestick I'm looking at here reflects the price, which has happened in a given day. And obviously the date will be at the bottom, as you can see. So now Forex as a whole, this is so many markets. Now the platform I'm using is called TradingView, but you can see many currency pairs to choose from. Now, how does one make money then? How does one profit from the movements in the prices, right? So take this. Let's imagine now we're going on holiday, right, for 11 days. Let's have a look at a little example, right? So this here is the pound against the dollar again, same as what I just showed you on the charts. Now, when you look at a currency pair, any currency pair, and you can see from all these here, pound against the dollar, pound against Australian dollar, pound against the yen, right? Euro against the US dollar. On the left will always be the base currency. And what that means is the currency in which we're holding against the quote currency that you're looking to swap for, right? So, as I say, you're going on holiday now, you're going for 11 days, you've got £1,000, right? And you want to exchange it for some dollars, as I say, because we're going from the UK to the States, right? So you got your £1,000, you exchange it. Now, if we look at this rate, what we know is for every pound, we'll get $1.35. So if we've got £1,000, do the maths, that would be $1,350. Okay, so let's imagine now you stay there for your 11 days and you return, right? 11 days later, it's now the 24th of the 12th. It's Christmas Eve, you're back from holiday, you're buzzing. So now what if I told you you didn't spend any of that money? That money you've exchanged, that $1,350, you didn't touch. Let's jump back on the market. Now, this is when you bought the dollars, right? This is the 1.355. And since you've been away, the pound has weakened. And if we flip reverse now, because obviously you're back from holiday, you've got your $1,350, you're looking to change it back to pounds. This needs to be the other way around, because then we're going from pounds, they're going from dollars and we're exchanging back to pounds. So flip reverse, dollars to pounds. Again, this is just the exact same market now. It's actually just opposite. It's the exact same market opposite. So here, the green represents when you get in. The red represents when you get out. And if you look, obviously flip reverse. So this is when you got in. The dollars, which you've been holding, the $1,350 you got down here, when you return on the 24th, if you look at the date at the bottom of the grid, the horizontal grid, the price is now 0.7900. And this is for pounds, right? So when you've been holding this $1,350, The dollar itself as a currency has strength, which means its price is increased, which means the value of the currency you're holding is now stronger relative to the pound. So what does that mean? So if the price has now gone from when you got in, it was obviously over here, it was 1.3500, but at that time it would have been on the dollar to the pound, 0.7400. If you look to the right on the vertical grid, strengthened. You've held the dollars, you've not spent them, you've still got them, the price has gone up. So now it's 0.7900, right? Let's get the old calculator out. So you've got your $1,350, $350 against the quote price. So boom. So over that 11 days, you would have made a profit of £66.50 with 1,000. And that is a basic example as to how the markets work. So that essentially is how money gets made in the markets. So, well, that's not how traders make their money. I can assure you, we're not going abroad and popping into Tesco's and we come back off holiday, held $1,000 for a week and just, we're not doing that. We've got brokers accounts. So you set up your broker's account. That's very easy. You literally just go online, you can just choose your broker, put your details, make your deposit, you've got your funds in the account, bang, you're ready to go. And that can also be, that I think one of the reasons why Forex and trading is, almost published as a scam by a lot of people is because it is very accessible. People are also in the industry for the wrong reasons as well. So if we look over here, obviously once you let me just bring this up quickly. When you set up your broker's account, you can link the brokerage account to a platform called MetaTrader. Now, as I say, I will do all my analysis on my selected pairs, which I stick to. I never change these pairs. I always trade these pairs. I will always do all my analysis on this platform, which is called TradingView, as I say. But I've still got a broker's account, which I've got linked to MetaTrader, and I monitor all my trades on the phone here, like this. But the reason why I've got this photo in here is because a lot of people come into the industry, they've come into the Forex industry, seeing photos like this marketed, especially on Instagram, by people who don't know what they're doing, really, as well. Some of the things I've seen is absolutely, it's quite painful, because you see them advertising things and people are falling for it. They see all these profits on the screen, and it's quite a shame, really. But how do they make their money? Those scammers, essentially, when you sign up under their affiliate link, the broker will pay them like sign-up bonuses. Every single trade you place, they will get paid a commission for, and some of them even have the cheek to charge you monthly fees. But yeah, I mean, a lot. And if they do make money, there are some signal providers that will provide you signals who are brilliant. There are some great signal. I'm not saying signal providers are all dirty and in the industry for the wrong reasons, because there are some genuine good ones out there. But a lot of them will repackage signals that work as well, and we've seen quite a lot of Instagram traders exposed for that as well. So there are scammers in the industry. Forex trading is not a scam. People make a lot of money trading. The catch is it's very difficult. It's very hard to get to that stage, get to that point where you're able to generate a consistent income from trading. I've seen these Instagram scammers. They genuinely are fooling people. That is because they're making a hell of a lot of money scamming people in the process. They're just allowing people to trade under their affiliate links, people to sign up under their broker links, and they're making a lot of money off that. So they're fooling people. But when you know exactly how to trade and you're seeing some of the things they're posting, like, they can't trade. Because I've seen people, let's take this pound Aussie dollar trade here, for example. They're saying things like, just turn this 50p into 281 quid. No, mate, you haven't got a clue what you're on about. Like, it's absolutely embarrassing. What these are down the side here are lot sizes. And all a lot size really is are the amount of units, and they're just basically abbreviated. So, for example, 1,000 units is a micro lot, right? 1 micro lot is 1,000 units. 10 mini lots, is 10,000 units, right? And a standard lot, so here a standard lot is 100,000 units, and units being units of the currency. So here we would have been exchanging 1,000 units. 1,000 units of the pound in exchange for 1,350 units for the dollar. So that's a little bit about lot sizes. Traders will also use what's called technical analysis and fundamental analysis. Now, technical analysis is essentially, if you will, drawing on the charts in order to identify strong points, weak points is also. Now, within technical analysis, things like trend lines will be used, support and resistance. Now, a trend line is essentially something like this. So I mean, I can remove that now, really. But if you look, the market is trending off this, bullish trend line. But support and resistance, it is quite self-explanatory. So support within technical analysis is anything that supports the price, basically influencing it to rise. So essentially, just off the top of my head, I mean, bad example, but you could say here, because obviously the prices had two interactions with. So that's support, and then resistance is, essentially the opposite. So it's influencing the price to go down. So over here, you would have a bit of resistance. So, we break through resistance, we come through, and that does again act as support. So that's support and resistance and technical analysis. Now, fundamental analysis is essentially news, things that are going on within the economy. Now, as a trader, it's very important to know when these scheduled economic data releases get announced. Now, I'm on Daily FX here. This is the economic calendar, and it will tell you the dates and essentially all the different types of economic data releases and what current country they're relevant to, the sort of impact they're expected to have on the market, and their actual figures, and what they're expecting, etc. So I'm not really I don't really get too deep into fundamentals myself. I won't go into one on this video. So that's technical and fundamental analysis. And then just to finish up, a lot of people, friends and family, when I speak to them about trading, they'll always ask about the two different quotes and why there's two and what they mean. So essentially, if we look at this, for example, let's go with this. So US dollar against Japanese yen, you've got the bid and the ask price. So the one on the left is self-explanatory, the one's the bid, and on the right you've got the ask price. Now, if you look in terms of the difference, they're all essentially the same numbers, but there's just a little difference on the end, and there's a 2 pip difference here, and that 2 pips, what that essentially is your cost for the transaction. So that's how the brokers will make their money, right? Some will charge small fees, some will take percentages of your winnings, some actually trade against you, but that's another conversation again. But here, 35, so US dollar against Japanese yen, you got 85.354 and 85.374. So there's a 2 pip difference. So when you place your trade, when you get in actually 2 pips more expensive. So you're paying a little bit more, and that's how the brokers make money. And then when you get out, when you want to hit your take profit or your stop loss, you'll be stopped out, you'll be filled 2 pips early. So basically, that's essentially how the brokers make money. So yeah, that's everything in terms of the basics of what Forex is. After watching this video, you should have a good understanding as to what Forex is, how they make money, and how the movements in the market essentially, how people profit from those movements in the market. So yeah, that's it for today. If you're new to Forex and this has helped you at all, just smash that subscribe button. I am going to be posting out more content in the future, quite a lot of deep stuff as well, to be fair, within the markets. I am also on Instagram as well, as the Third Eye Trader. I've got some ideas for some exclusive content on there also. So drop me a follow on Instagram too. Drop a like on the video. Any questions you have at all, just drop them below. I'll be happy to answer anything, or even if you want to DM me on Instagram, again, more than happy to answer any questions. But yeah, that's it for today, guys. Peace.